Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord TraderLab community? Thanks, Marty. How we doing in YouTube? Okay, thanks, Stephen. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. We have a very busy day, very active market, and a lot of things to talk about. I'm going to go as fast as I can, and if you want more of what you're going to be seeing here today, which is structured trading using a process based on order flow, using a high-tier tool like Bookmap, auction market theory, in other words, how the market works, why it does what it does, and probably the most important part, how might you participate in the market? This is what the TraderLab is all about, and it's based on structured trades that I'm going to be sharing with you here, and they're available to everyone. If you're in YouTube, there's a link down at the bottom. You can access TraderLab. The TraderLab community is a group of like-minded traders with all varieties of experience and time in, from newer developing traders to substantially advanced traders, and all different kinds of methodology. The thing to understand about the business of trading, it is not trying to figure out what will happen, because anything and everything in the market is random and the next moment is always uncertain. Most of us are seeking certainty, and we continually tweak and add indicators, and we think more gives more certainty, but that is not our business. So if you're having a challenge, and of course there is no one solution for anyone, you have to be able to relate to it and understand, does it have a statistical edge? And oh yes, trading is about statistics. It is not about prediction. And many of us go down a path based on our psychology and our emotional or primal wiring. And based on that wiring, we choose how we will, shall we say, anticipate to operate in this environment. But if you understood the psychology, how it works, and the environment, you might find that getting aligned with the environment with a somewhat different approach might give you a better overall opportunity. And again, you have to determine this for yourself. Hold on one second here. I have to look at the current market. Okay. Quite a day today. Let's get going. I'm going to move as fast as I can. And remember, if you have questions, they can be answered in the Bookmap Discord TraderLab community. In the limited time I have here, I can't answer all the questions. Post them, but I'll do my best. But if you want specific answers, come to the Bookmap Discord TraderLab community. There's no cost to be part of this trading community. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper, take a couple notes. And remember, this is not a trade calling room. Based on all the activity here, I don't know if we'll get into real time. If we do, we'll go from there. And thanks again for visiting the TraderLab. Now, we all know, I would suspect, that we had a huge trend day yesterday, and we had a big report this morning that was very important. The report was basically positive. And there's an old saying in trading world. It's called buy the rumor, sell the fact. There's another piece to this, and this is market mechanics. And write this down. It is so simple, yet most of us don't think about it unless we understand how the market works. And that is the market goes up to go down. The market goes down to go up. If we have a big day up and a breakout and all kinds of stuff going on here yesterday, what's in the market? Longs. And what's under the market? Sell stops. If we run out of buyers, then what happens? The longs become the sellers, and then new sellers come in the market, and it accelerates it. The other piece to understand is that market mechanics, if you understand how the auction works, why does the market go up and go down? It's looking for too high, and it also looks for too low, and then it looks for a fair price. This is why the market even moves. This is the basis of this. Now, I'm going to get right into Bookmap. I'm going to start showing you order flow. I'm going to show you specific trades that are structured trades in the Bookmap Discord TraderLab chat. Now, again, you have to vet these. These are not mechanical. They are, and this is one of the things that is a dilemma for plug and play traders, indicators, all that, which we all understand. And the dilemma is, most traders embark on a path of getting the indicators to do the job, and then it's multiple indicators, multiple inputs, multiple time frames, and in the end, all you have is randomness in a random environment. So what happens to us, and I always want to start out with this, is we win, but gamblers win too. But if you actually knew that whatever process you're using, even though it has intermittent winners, which motivates you to try to fix it, make it better, and keep doing the same thing, tuning, tweaking, curve fitting, that over time, it's a guaranteed loser. You might not keep doing it. But because it works, our mind remembers and hooks onto it works. I just have to make it better. Is that you? Well, if it is, that's Trader Groundhog Day. Waking up, doing the same thing, getting the aha moment and getting excited, and then having to do it all over again. Trader Groundhog Day. I did a webinar on it. So let's look at the what we got going on here. Yesterday's all-time high, overnight mid, a low volume node in the ETH. I'm just giving you some levels. I can't put all the levels in here. ETH high, okay, off the report. So now, and there's another thing here, and I'm going to really try to roll here, guys. Here's targeting. This is our target, which we just achieved, one of the targets, and there's another one down here. I want to point it out to you. There's a couple, actually, I think. 56 down here is our next target. So if we get underneath this 44, we're looking to take out yesterday's low and come down in here. So all this is targeting for today's trade. Neither here nor there. Just want you to know. And I'm not spending time. So now, yesterday's settlement, yesterday's high, which was the RTH all-time high, and then, of course, the report and everything above us. So let's look. What do we get? Now, this price is called the overnight volume point of control. What this is, and so you understand, the auction. Let's talk about the auction. The auction, the goal of the auction, why we have a market, is to try to figure out what's too high, what's too low, and what's a fair price. And the thing about the auction is it's a continual process, and it goes on in all fractals or time frames. So all this behavior that we see, it's happening, and write this down, Russian dolls. Now, I understand we all grow up in trading world time frames. What's your time frame? What's the right time frame? Well, for me, there is no time frame. What there is behavior of the participants, and that creates the time, not the clock. You might think they're the same, but they're really not. Because what happens here, not 5 minutes, 1 minute, 30 seconds, None of that has anything to do with what happens right here. So I'm going to say not time, participant behavior. The other piece to that is inside of these are called fractals. And what a fractal is just think Russian dolls. Write that down. A Russian doll, and a Russian doll is the big one. And then you go down in quote what? Time frame? How about fractal? It's the same generic behavior. These are basic processes of market mechanics. If you understand and maybe think about it, you might have a different way to see the market. And it's not that there's a right way. By the way, I don't know what the right way is, but I don't use indicators because I don't want to be conflicted. I don't want inconsistency, and I've already been there and done it. I'm going on 45 years of trading, and anything you've done, I've probably done it. And it doesn't mean I've done everything because I've stopped trying to look for the next, magic bullet. I figured out there is no magic bullet. Maybe trading is not complicated. Maybe it's actually simple. And we tend to think in complexity reveals something that nobody else sees. How about everybody has done what you're doing? There is no secret sauce. It's all right in front of you. All you need to be able to do, in my opinion, is vet it. Know where your edge lies. Develop the discipline to follow a plan, just like the casinos do. They don't make the games up. They only play games that have a statistical edge. And yes, all businesses have cost of production and overhead, and the casinos pay the gamblers. We have to pay also. But let's get started. Overnight volume point of control. We're opening higher inside of yesterday's range. The overnight, and I don't have time to give you many statistics, but I'm going to give you one. Higher inside of yesterday's range, our first statistic, and it's highest statistic on the Richter scale, 82% probability we're going to come here. Well, if I open up here, then I have, and let's look at yesterday's high. What is the statistic for yesterday's high? I'm going to try to find it here. Hold on. I'm losing my mind. 54% probability. So here, okay? So I have 54% probability of getting over here. I have 82-ish% probability of getting here. All these statistics are available to you in the Bookmap Discord TraderLab community, and there is no cost. Now, I know this. Now, what does this mean? It means for the entire ETH, including the report and everything else, this is where the highest volume was. The potential of the market, if it gets stretched out, remember, what is the job of the market? What's too high? What's too low? What's what? What's too high? What's too low? What's retail? Okay? So, and this is the ETH low. Too low, up above, too high, and what's retail? There. So that's my bracketing. So I know I have the possibility then of coming up here, going down there, and here, high probability. So I don't know when the market opens what's going on. I mean, if I knew, that would be great. I don't know. So I'm going to show you the first trade I took. Now, again, these are structured trades, and they're available. There's 60 PDFs of these you can download, and it's not mechanical. This is kind of the where most of us are looking for a red light, green light. I'm going to suggest if it was that easy, we'd all have ATMs in the basement. Maybe that's not the way this works. I'm not saying it might not be for you. It certainly never worked that way for me. And I spent years trying to get it to work because I thought I needed to be persistent and that it was just around the corner. It was just around the corner. And then I get around the corner and there'd be another corner. I just kept ending up doing the same thing. So this is the retail price in the ETH. Let's think about auction. Let's think about how markets work. And it's the way to relate to this is like going to the store, because the market is a supermarket is a market. This is a market. They operate very similarly. if the price of S&Ps and the ETH, the highest price where buyers and sellers did the most business, let's think of that like buying a product in your supermarket. High volume is retail. You pay a retail price. That's where all the volume is going through. If they put it on sale, you might be able to buy it lower, but it's only temporary, and then they bring it back to retail. On the other side of that, and this is just concept, if it gets too high, the buyers, the volume will drop off and you'll have less buyers. I'm not paying that. And then it comes back to either this price, let's go back to the fair price, or they establish a new fair price. This becomes unfair. That's the basic concept. Now let's take a look. 1 second, guys. Got to make sure things are under control here. 1 moment. Got to make an adjustment to something. Be right back with you. And if you have questions, please post them. I'll do my best when I come up for oxygen, but I cannot look at those while I'm doing this. They're on different monitors. This is not my trading. So this is the RTH open right there, right here. This yellow line is called the developing volume point of control. It is the same as this, except this is where the highest volume was at the end of the ETH. That's why it's overnight high volume area. This one is developing. It starts at 0, and as the volume comes in, it's going to shift around. We can glean an understanding of behavior by reading the volume. Remember, traders or buyers and sellers, which is what this is, are shoppers. If we have buyers here and now no buyers up here, what might that tell us? It might underline, because it's only maybe, say that this is too high in this micro structure. Now, I'm going to be talking about many different concepts of fractal, because this is, remember how Russian dolls are built. They are inside of each other. You guys think of time frames. Well, a 60-minute, a 15, a 5, a 2, a 1, whatever, right? It's the same thing, but again, no clock. So with order flow, I can not only see the volume, I can see the aggressors. The green bubble is delta. Delta represents the aggressor. So the aggressor is a market order, right? They cross over. The other thing in delta is stops, because stops become market orders. So they show up as delta. So there's a few things you can do with this, and it's really cool. And this is the iceberg. So this is showing me icebergs. This is showing me stops. So I got sell iceberg, buy stops, sell stops, and somewhere out here you'll see a sell iceberg. Don't worry about them. You'll see plenty of them. Or a buy iceberg, I mean. So the market opens, 35 buy stops, 3 buy stops. Who knows, right? I don't know. I have a buyer here. Okay, lovely. VPOC migration. Now, this is minutia, guys, and this is advanced. Every day, if you follow the stream, you're going to see me start at the same place, because this is an opportunity for you to see a very fast auction, and it's not tradable for most, unless you're already successful in the more, I'm going to say, the more developed structure. This thing can do anything. So if somebody gets involved here, I consider it very aggressive, and it's only for experienced traders. This now is the retail price. What do I see here? Nuance, watch. 3 stops, 1. Buyer is here. If I break away, it is suggesting this was absorbed. There's your iceberg. And this is exhaustion. Where's my delta here? I see nada. This is not tradable. Let's just say I wouldn't short it. I'm reading it so I don't take a long. So let's watch. Where does it come? Look. What does it say? This is the language of the market, right? I'm not blessed with indicators. I know right here, These buyers are, I mean, if we take it out, then I go, oh, that's nice. But this is too high. So let's mark it. I call it, let me get it in here, a variable high volume node. I made these things up when I started doing this. This was not around. Nobody was, I can't say nobody, but I didn't know anybody was doing it. And I made up terms and things because this wasn't out there. So I started making this stuff up. So, because I observed it, I said, well, what is this? Why, the line. But yeah, but it's not that it's a line. It's what happens. What does it mean? If I'm in the store and this store is a little store and this price becomes too high and I don't know it's too high, I break away from it. Now I know if we come back and I don't get above it, these guys are stuck, and now this is resistance. This is support. This is resistance. Let's watch. And what's this down here? Support. Why? Retail price. What's this? Retail price. If it's too high, I leave it. And I don't know what it's going to do. Watch. I don't know. Watch this. Now, I posted in the TraderLab before the open. I was going to show it to you, but I don't have time for that. That this 94 was an area to potentially short. So I'm looking for a long out here, and I'm looking for a short up here. So that's my plan for this. So I'm going, I don't know. But let's look. Too high. I see my, chop, two-sided trade. So I have a location for a long down here, and I have a location for a short out here, 94. So let's look. So and I wrote these down this time so I can move a little faster here. At 8:36, where is it? Yeah, here. So I have this. Let's look at this. This right here is in alignment with the overnight volume point of control. 82% probability. You guys know this if you follow the stream. And you have to vet this for yourself. So what I see is, well, let's go back to our VHVN. It's right there. So I don't have an issue with the market. So I know this might be too high. I also know this is the opening swing high, which is why I don't recommend, and I don't make any trade recommendations that developing traders try to trade this, because the opening swing, if we had early sellers, their stops are going to be here. We all know that, right? So it's not for me to trade here unless I'm somewhat skilled. And let's just assume for the moment I'm not. I mean, I'm not here, Let's just assume I'm like everybody else. And pretty much I am. I've just been doing it longer. Right here, I see exhaustion. I took out the opening swing high, and I'm going, what's going on? I got 94 on the upside, and I got the overnight volume point of control below this. So whichever way I go first, and before the open, I said, watch 94. So I was going to sell 94 if we went up first. I was going to buy overnight VPOC if we got here first. And, that was that. So there's my 94. Now, I can't buy anything like this. When it goes boom, bang, I'm going, I'm not going to tell you what I'm saying, but I'll tell you what I'm emotionally feeling. I'm feeling I missed it. Watch. So now at 8:36, I got long at 56.87. Late. Bad. FOMO. Error. Watch. There's my location, and it pops here. I bought it. That's me. I bought it here, and I FOMO'd in. I'm going to tell you. Why would somebody like me let you know that I am, quote, like you? I am. I make errors, and it's an error. I recorded it in my journal. What happened? FOMO. And it was in the moment. Where is my entry? It is here. Now, did it change my life? No. but I might have been able to get in at 86. You see? I just want you to understand that record that as an error because my plan, when I have location, I'm going to open this up a little further for you. So I have this, and I don't know right here. This could just, so I see this, and these sellers, now we don't know this at the time. Follow what's going on. So stops are coming out, going to zero, right, Lewis? Buying iceberg. So I see the iceberg taking the other side. So the antenna now is sort of going up. Location. This is like real estate. 82% probability. And I don't know here. When I see this, I now look at this and I'm going, this is absorption. And then I see the buyer. And that's where I impulsed in. Okay. I want you to know that. I journal this and I consider that an error. Doesn't matter that the trade ultimately worked out. Here's the test. The smart thing here would have been to let it test because it could easily come under here and then come back. So let's look at it. Watch. Let's just watch. Now I have, here's the better way. And TraderLab screenshot this. So I have absorption here. I come back to the developing volume point of control, I believe, this line, which is retail price in the developing time frame. This is an obstacle. So I did a bad thing, and I'm making a point of it because I always talk about psychology, and I certainly am not immune. So I recorded, and I'll reflect on it. So right here is absorption. There's an obstacle. There's the counter rotation. I think it's going south. I get long up here, and I'm already going, you're getting stopped out. You're not worth anything today because you're not trading well. So here it comes down again. It looks like it's going to fail. This is what's really important. Not getting in here. This. And I see the buyers again. What does that tell me? Too low and absorption. So the buyers are the passive side. You can't see them, are absorbing unless we see an iceberg, which fine. And then you see the delta and they're not getting anywhere. We come down again, obstacle. The delta, they're not getting anywhere. Now I have microstructure here. I come down again. Looks like it's going to fall into the, the abyss. Watch. This is a trigger. Buyer. So I have now support, location. No seller here. Buyers. So what do I have? Look at the volume here, right there. This is microstructure. This is the long entry. I would have got in at the same place pretty much, you see, or in here. But the fact is I did bad. It was FOMO, I'm telling you. And it jumped right in my lap. It was like, and let's watch what else. Where's the volume? Where's the seller's trap? Watch. This is the entry. Now my stop is outside. It has to be under this. You see? So this is it. So I FOMO'd. I'm just telling you, it was just ridiculous, So there's the location. There's the buyers. You can see it. And then it's a long, and then 94 is the target. So let's look at this. Now, overnight mid, let me give you a statistic here. So you know how I'm using statistics, right? I'm going to try to get speed up here. It's hard for me to do this. 72, almost 73% probability, past performance not indicative of future results. This is the scale. I go ahead of this. So the long, and this is like by the skin of the teeth long, you got to be conscious of yesterday's high. That's fine. If you want, you can scale yesterday's high. Doesn't matter. Overnight mid, high probability, 94, outside target. This is called VPOC migration. This supports the up move. What does this say? Too low. What does it say about this? Too low, right? What about this price? Too low. VPOC migration. New retail price. You can't buy it here, and now you can't buy it there. Shopping. What happens here? VPOC migration. This is all suggesting we're going higher. VPOC migration suggests we're going higher. Watch. 94 is the target area. So for me, 94. So this right here. So I got out here. Now, I made an error. Let me show you the error. Why am I telling you this? I make errors. Let me find it. I'm looking here. So, okay. Yeah, lovely. Here. Right here. Yeah, okay. This is harder than I thought it would be. At 9:04, I sold, which is right here. I sold this here at 93.75, wherever that is. This. So I got short here. My stop is here. I broke a rule. I was at my location. Okay. Sold it. My stop is here. Took the stop. Error. Now, I'm still where I want to be. I FOMO'd in. And this is second time. And I'm going, what's wrong with you? Among other things. And are you surprised I'm letting you know this? Don't be surprised. I'm like you. I'm human. I make errors. Those are errors. So this is a stop. Now, for me, if you get in here, and I got in at 93.75, I got out at like right here, so 95. So it's not the end of the world, but it's totally, I might as well just throw dollars out the window and invite all you guys to come to dinner, one or the other, right? So I go, okay, deep breath, cut it out. Now, I'm still in this area and I'm looking. So right here is volume, seller. What I didn't do, here's my error. This is a location for the trade. What happened was I didn't wait. I sold it here. What I needed was the retracement. And what would I have seen if I'd done my job? Buyer, buyer, buyer above here, buyer. Well, don't want to sell this. Seller. Come down. Back up. Now, what do I see here? Nothing. What do I have here? A seller. Watch. Wow. 32.50-ish. 32 is our target below, by the way. Not a recommendation, just mentioning it. And we'll come back to that. So right here, I see nothing. No buyers. I got my volume here now, and I'm clueless. I have my seller here and no buyers. I have sellers here. I have buyers here. So just watch what happens. Now, at the moment, this is my high volume. It is coming through here. high volume node, right there. What is a high volume node? It is the same as the VPOC or VHVN or the overnight volume point of control. This is called fractals. So, what I did, shame on me. But, okay. But what do I see developing now? This is a consolidation. And a consolidation is this, chop, 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 chop. And inside of a consolidation is volume. I'm going to put a little line on here because I want to show you the short. And yes, I did get the boat turned in the right direction. I just had to slap myself a few times, not literally, but figuratively. So let's look at the trigger. So I now have high volume. This is a distribution. This is your store in micro or fractal. Too high, too low, retail. So, it's on sale. That's what goes on in a consolidation. Here, let me show you. I'm going to draw another little thing here so you can visualize this. And this is what you guys ought to be doing if you want to learn how to read this, or do it on a replay if you don't. Because what this does is show me structure. This is the outside edge of the distribution. The sellers were absorbed by the buyers. This is the outside edge of the distribution. The sellers stepped in. Okay, so sellers were here, including me. Thanks for playing, Tom. We're going to send you a ticket to the buffet. Now I get my sellers here, and I don't know. Notice the chop, right? The volume is in here. Here, I break down. The sellers are below these guys, and now my buyers are up here. Let's watch. This is the location of the volume. I put a limit order right here. That's what I'm supposed to do. This is a trigger in the TraderLab. And what we're doing here is this right here is its own little auction. And inside of, and don't forget, I had a location, 94. Now, listen, there's no precision in trading. It's like, maybe. So that's a short. This is the scale. Now, right here, I can anticipate buying at mid VWAP. Wow. See, we're getting some short covering. So this is my scale. Then it's trade management. I don't think I'm going to go into trade management. I'm just going to keep rolling here. Questions so far before I continue along here? Because we have more. 56. Hold on. 9:30. Okay. Yeah, I got another. Next trade's at 9:30. Questions, guys? Sellers volume 128. Yeah, Peter, it's now go in there. Okay, so let's watch. So this is a short, and I won't go into trade management. This here, by the way, is an advanced process right here in TraderLab. This is an add advanced. You got to get the broad stroke down before you go into advanced. This is a advanced add. I didn't do it. And look where, and here's the other little piece. Remember this, right? Retail in the ETH. Current low, break, test from below. And what else? Liquidity in the book, buying icebergs here, break low, pull back from underneath. This is what it looked like. This was the current low of the day. Liquidity comes into the book. This is how order flow can help you. What is going to happen here? Why would an iceberg buy here? Are they getting long? I don't think so. I don't know. But, I'll tell you what I think. If the low of the day is here, where is the volume going to come from for this guy in the limit book, that's the limit order book, resting liquidity, and he just tossed it in the ring right here. It's going to be retail sellers get consumed or absorbed by the buyer. Does that make sense, guys? This is order flow. Does this make sense? How we do it in YouTube? By the guys, YouTube, thumb up, please. This stream and the Bookmap Discord TraderLab community is available at no cost. If I'm going to charge you something, it's going to be a thumb up in YouTube. Is that fair? So please give a thumb up. That's all it costs to visit. And even then, we're not going to hold it against you. But a little appreciation and support of the stream would really be helpful. So I'm asking you to kind of return a favor. So this is where the absorption is taking place. Now, this is an advanced process. It is in the 60 PDFs you can download. I don't go into this much, but I have to show it to you because I was pointing it out yesterday too when I was telling and suggesting to TraderLab participants to do screenshots of this behavior. This is a continuation trade. It's advanced. Location. Remember, location. Break low. Here's what you got. Right here, what is this? This is a distribution. This is too high, too low. Retail. This is the outside edge. This is the current low of the day. And there's the break of that. If I break below it, and now I have the liquidity here, and I pull back and I can't regain it, this also is a short. It's a TraderLab advanced trade. Just saying. And off we go. By the way, the scale here. Now there's a target down here. Wow, this thing is really neat. Let's watch. Now, trade management is a separate topic, and I can't go into it here. I've kind of gotten to the place in my trading that I don't know anything in the sense of what's too high. I mean, I know the auction, but I don't know where the other side is going to get activated. Just no clue. So I manage my trades. I look at the microstructure. I'm just telling you how I do it. And I don't know, there's probably better ways to do it. I've kind of given up on that part in the sense of the perfect way. There's no precision. Our nature is to want precision. Our FOMO wants to not leave 10 cents on the table. I've kind of figured out I don't have a good skill there because I don't know where the bottom of anything or the high of anything is. I just have to follow process. So I use the auction. So let's look at this. We come down, and I know statistically we have a high probability of taking the first hour's low out. It's called the initial balance low. Okay? And the reason for that is we rejected 94 and the first hour's high, not so much. And we're under the overnight volume point of control, which was an add, remember? So let's talk about just trade management. Now, I have targets down here. I want you to know my higher time frame targets. This, and there's another one down here. I think it's 34, which is a higher time frame target. All these are on the chart before the fact, and if you're in TraderLab, you would have these also. Now, you wouldn't know. Here's the thing about having a target. It's random in the nature of will we get there? How will we get there? If anything, nothing. So all this is random. That's what drives us crazy because we want certainty or rigidity. Certainty doesn't exist. So let's look. Let's just take a look at how this trade might be managed. Now, I don't know. Right now, none of this is here. We're just in free fall. Okay? I'm going to now take you into the process again. This is a distribution. Too high, too low, right? We fall out. Now this is a new distribution development. Chop, chop, chop. Remember? Consolidation. Too high, too low. let's look at what's going on here. This is one way to manage trades, and I'm clueless. I don't think I know anything. Hold on 1 second. I'm looking for my next trade in here. I really wanted to show you the trades. Okay. Right here, I see absorption. I see my icebergs. Right here, I have my sellers. They're absorbed. That means they're stuck. Absorption traps the side. In other words, if you get sellers and the market doesn't go down, didn't you ever wonder why? It's because there's a passive buyer. But with Bookmap, we can see it. And there's the absorption. So that's showing, and here's the liquidity in the book. Now, this is algorithmic. It's garbage. Or let me be more generous. Noise. I ignore it. What I'm interested in is the resting liquidity. There it is. That's the limit order book, and I can see it out there. There's these contracts sitting here. You can see it right there. But with the heat map, I'm not looking over here. I don't have time for that. But I know the liquidity is sitting here, and I'm not watching this thing. There's the sellers. Now, what happens when you go into liquidity, and remember, there's icebergs absorbing here. Either the sellers are going to eat up the liquidity and keep going, or the liquidity is going to stop the seller, and then we're going to counter rotate or reverse off it. Now, whatever it does, right? And I have nothing here. In other words, at the time, I'm just in free fall. But what I do have is this low volume node. And a low volume node is the outside edge of a distribution. When you fall out of a distribution quickly, which is what this is, and then you start a new auction, if you will, in this structure, it's going to rotate. And that's what a consolidation is, and there's the high volume. So all of this is telling me right here, that I may counter rotate or keep going. But as soon as I come above here, then it's possible I'm going to squeeze. So let's just see what it does. I want you to just see. Where do I come up? I come here. Where did I go into? This low volume area. And I don't have time to explain all the reasons why it happens. And the other part of it is, who knows if it's going to happen? That makes it even more fun. But here's another thing I know. I have over a 90% probability, past performance not indicative future results, I'm going to take out the first hour high or low. Given the fact we're doing the Acapulco cliff dive, it's going to be this. Probably. Based on the statistics, right? So I'm looking for this to get taken out. But I also know the market's short. And remember, the market goes up to go down and goes down to go up. The down to go up is the squeeze. In other words, sellers, shorts, buy stops. All of us protecting our short positions if we're short. So I don't know how far it'll come back, but I have structure. So let's look at the behavior. So I'm looking for it to take this out. Do I have a trade here? No, I do not. I have one that's warming up, though. See it? See the behavior? So right here, because of this, I cannot do anything at this point. And why else? Because the market is short, but at 9:30, the IB stat is locked in. So over 90% probability. So I'm looking for a short, and I'm looking for location. And I also know there's stops, somewhere out here. So let's just look at it. Let's see if we can make sense of this thing. Remember what happened here? You do remember, right? Watch. We come up, we test. Right here, it looks like it's going to blow through. Now, I did not take a short here. Or wait a minute. Sorry. I can't keep doing this. It's killing me. 932. Yeah, I did. Huh. This is what I was leaning on. You know what's so interesting about this? I look at this stuff and I'm going, nah. And then I'm going, well, gee, you took a short there. Let me show you. Let me tell you where 932, 56.75 was the LVN. Oh, here's why. Sorry, I didn't mark this. This here, let me show you this. This is auction based. Now, this is another element. This, remember, this is the low volume node, outside edge. If I come above this, then my potential is to rotate and squeeze out. 95, I'm sorry, I'm going to write this down. 75.50 here is my location. And it's called the low volume node. Let me just get it in here. So this gets marked on the chart as this is developing. And I forget all about it. Except I have no place to participate. And I have, remember, that behavior that happened over here. So if this was a selling opportunity for a continuation trade, what is this? There's going to be stops here. Now, I don't know. So I'm at this outside edge. There's two possibilities, here and here. And the high volume is here. So this is an area for me. So, and I'm looking, and I have my stat at 930. Now it's all coming back to me. Boy, I can't remember this stuff. I took so many trades today, but I'm only going to talk about the structured ones. I got short at 74.75. I'm going to show you the trade. Now I'm going to show you the trigger. Is everybody okay? Location, location, location. Sweep, buyers. Remember this. Location, outside edge. And this is called mean reversion. And it's mean. But it's a concept of market mechanics. Looks like we're still going for our target down around 32, 33, not a recommendation. I'm just looking over right now. So right here, right there, is my volume. There's my location. Now, I don't know. So I see my buyers. Let's look at it. I break. You know, sometimes I look at these things, I'm going, how the heck did you get that? I don't know. It's kind of like, actually, this is the trigger. Let me show you this. So this here, so I'm up here and I'm at my location. Now there's no precision. This could just, it could do whatever it's going to do. So what I do is I'm saying, wow, look at the buyer. That's important. Remember, there's going to be stops above this swing, you know, and up in here, maybe. And this is where I'm starting. I'm looking for the short here and there. So this is an area. That's all I got. I come up, and for all I know, it's going north. Watch. I open this up, and again, alignment. Here's my buyers. Seller, buyer. What's going on? I don't know. What's there? Look. Watch. This is how I use stop and iceberg. Now, location, location, like real estate. Took out the swing, got the stops, fine. And this is mean reversion, which I will discuss in a moment. I want to show you the trigger. Buyers are here, clueless. Let's look at the stop and iceberg detector. This is a piece coming up. Remember, stops. Buyers, buy stops. Remember? Buyers, buy stops. Selling iceberg. Huh, that's interesting. Location, I don't know. Buyers, going to the moon, Alice. What happened there? $24 stops. 4. Where are we going? Selling iceberg, selling iceberg, selling iceberg, selling, and it's still a suspect. I don't know. I'm just looking at it. Where's the change in behavior? Sellers take over here. I have my buyers here, and this is nuanced and advanced. I break, pull back, and I got in 74.75 here. And what am I going for? Here, let me show you. Now there's another piece to this. This is a high volume node. In other words, if I'm getting short out here, this is called mean reversion. This, in this fractal, is the retail. So if I'm working from this outside edge, I'm looking at this because, and anything can happen. Even though I think we're going to zero, that's besides the point. Doesn't matter what I think. I have to trade structure. So if I'm out here, I'm going to scale here. And that was my scale. And you see the chop, 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 chop. And then it's either going to come back here, take me out, or we're going to break below it, pull back to it, right? There. And this advanced is another short in the TraderLab. And again, I'm getting into things I probably shouldn't get into. But this is a structured short. You'll see why. In fact, I'm going to throw this on here for you guys. Now, some of the things I'm discussing here are advanced. And don't think for a moment, please, that you should be doing any of this, because you have to understand it to read it. I don't use indicators. See, what I'm doing is I'm looking at this, and I'm able to interpret a language of participant behavior. Let me show you. Hope you're getting something out of this, and I'll look up for your questions. I'm just trying to speed along. See if this looks familiar. Let me just get this. So this is the actual short. This is a different animal here. This is this. Remember how we sold the overnight volume point of control from below? So the long was long off of it, right? And then we got short, and then we broke below it and tested from below the overnight VPOC. Well, now this is the same, except it's fractal. Remember, Russian dolls. It's all the same inside of each other. Well, this is the high volume. If I got short here, I got a scale here, just in case we do this. But what do I see? I see now the auction around what's the fair price in here at the time. Let me come back. Let me just move this over so you see what I'm looking at. So I know I got this down here that was too low, which created that. And then I have this, which is my short, and I have to scale here. You see the logic? So I'm scaling here. Now I'm doing this. And I know two possibilities, back here or break low. If I break low and statistically over 90% probability and targets below, for me, no longs, trade management only, and this is an ad. Same reason the overnight VPOC was a short. Let me show you. So chop, 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 chop. Break low here, pull back. Buyers, no traction. This sets up an ad. Now, these are aggressive. Break below. IB. Okay. Next target. Now, hold. Now, this is VPOC migration. This volume in here in a fractal is the same as this volume in here. So now, in the developing daily time frame, this is the retail price. And we have a structured trade coming. Let me look at your questions. And by the way, notice, and where was that structured trade? Anyway, let me look up. I apologize for taking so long. I just am trying to roll. Questions on what we're doing here? Please give a thumb up in YouTube. It's important. Let's watch the behavior. In fact, watch the behavior right where we are right now. Not a recommendation. Watch the 44.45, not a recommendation. I just looked up and I see where we are. Just keep an eye on it. And we can come back outside to the 48.5, or right here, it could be interesting in the current market. Not a recommendation. I'm not looking at it. It's like out of one corner of the eye here. And I can't trade like that. So what we get here, so this is a short if it's in your trade plan. If not, you're not doing anything. We break low, we get VPOC migration. This suggests lower. We pull outside right here. This is too high. This sets up a short. Let's look at it. Now, this is fractal. There's your micro high volume. There's your trigger. Here's your test, and your stop would have to be over here. I didn't take this. And that's because, wait, let me say I don't take these things. I don't remember. Oh, I did. God. 952. Where's 952? Yeah, here. Right. Man, I can't remember these anymore. 952, VPOC migration, IB continuation trade, and mean reversion. This is like a package deal. There's too high. There's the outside edge. This is called mean reversion. It's the same trade as the one that was outside coming back to here. This now is a continuation trade down to here. This now comes down. This is your new retail price. We come back and test here. Too high. It's shopping. It's a short back to there and then continuation. Just so you understand, this is all structured trading. And there's one more trade here at 10:10, and then that's it. And you'll notice I'm not taking a lot of trades. Here, this one. So let's look at this trade. This is called the IB continuation trade. And then I'll come up for oxygen. Now, this is nuanced, you know. I can see, and that's why this is advanced stuff. But I want you to see structure. If you can understand the language of the market, because the market is speaking to you, not your indicators, can you operate here? I don't think your indicator is going to do you much good here. Now, maybe it does. I really don't know. I know this is too high. This is the piece. And I know this is the current retail price for the whole day. I know in a fractal, this is too high. I'm trading multiple time frames as you think of them. Right here, I see my buyer. Right here. And it's going to the moon, right? This is resistance. What do I see here? A seller, a trigger. Where's my micro volume? It's right here. What? Right there. There. There's my volume. I'm going to put a little line on here. I just want you to see it. Now, if this is not your thing, that's fine. It's not your thing. You don't have a trade here. So what I have here is the volume. I have the seller and I have my buyers here. Now, right here, I know nothing. I can prove it to you. I know nothing. What do I see here? 3 buy stops. Does this look familiar? Potential exhaustion. Buyers above, going to the moon. What happens here? Seller, seller. I break this structure here. Very nuanced, very advanced. Break, pull back. Where's my buyers? So I have buyers here who are absorbed. Sellers take over here. I get a buyer. Where's my buyers? So this is a short. It might be too aggressive for you. My stop is here. And I have targets below, which is the motivation for all of this. And I think I have one more. Let me look. Yeah, 10-10. 10-10 was my last trade. I'll show it to you. So, 10-10, last trade. This is called the IB continuation trade. It's a structured trade in the TraderLab. Let me show it to you. Now, these are, you can download the PDFs. Now, you have to understand something. The PDFs on their own are not going to do you any good. You might as well just take a stick of dynamite and put it in your pocket. You need to understand when they're qualified, and you have to vet them. So let's look at the structure. Now, this is the trade. It's called the IB continuation trade. Why would we take a short here? Targets here. This is the primary target, and there's another one just below, but this is where I'm going. Okay? And it's before I stream, so my teeth are chattering. I want to get the trades in, if they present. So location. Now, this is the location. But let's come over here first before we get there. What do we have here? Let's look. I have this is too high volume, right? I have my VPOC here, which is retail price in the developing time frame. The mid wasn't here at the time, so ignore that, or the VWAP. But the IB is locked in at the first hour and a high probability, which is why we're selling into it. When we trace back to it and we have high probability targets below, based on the auction and the fact that everybody's running for the exit, we want to get short again. If we're not short, or we're taken out on trailing stops. Here it is. So I'm looking at this, and I want it. Now, what I want means nothing. It would be better for me if I pop the IB, get some stops, and then fail. Just want you to know. Subject to your trade plan, that might be what you do. And if it doesn't do it, you don't have a qualified trade. Let's look at the behavior. So right here, I'm seeing here's what this is what's interesting. Watch. I'm coming up, and I'm not there yet. This is where I want to go. And this is my retail price. We could just as well come up here. Remember, nobody knows anything in this. We're all clueless. Buyers here, I see absorption. So seller is in here. Seller, sellers. Here's microstructure. There's the volume. Watch. I see a buyer absorbing these sellers. I see seller absorbing the buyer. And I'm coming up to my location. I see the iceberg. That's the seller in here. I see the buyer, I see the seller, and I'm going, come on, Watch. Here's volume, and I see a seller. This is support. Let's just watch. Volume. Right here is the trigger. Let me draw a little line, and that's as far as I got in my trading today. Then I'm going to try to get more current for you guys. So right here, you can see the volume right in here. I'm going to draw a little box around it. And this is how you can teach yourself to recognize these things, because you got to draw it. I'm visual. So since I don't use indicators, I'm using the participant behavior. That's all I'm doing different than what you guys do. So when I see this, and this is my location, right? Where did I come? I came right up here. Do I know? Nope. I see my buyers. I see a sell iceberg, and it can do anything. Am I willing to take a stop every day? Do I? Every day. Buyers, where's my buyer? And right here, I don't know. So I've got my volume here. I break here. So I was looking at this. I had a buyer here who absorbed the seller. I got my sellers, my sellers, my sellers. My buyers are here. My sellers are here. My buyers are here. My seller is here. My buyer is trapped here. I don't know yet. I see my seller. I got my buyer. What's here? Nothing. I see my seller. This guy was absorbed. I break below him. That's my trigger. I pull back right here. This is my short. Stop is over here. And then I'm going for scale, of course, in this. That was it. Okay, done. And that was it. Now, I don't know. I haven't seen any of this. Now, there's another target under here. Where is it? 30. Guys, where was that microcomposite VPOC? I think 32, right? So we have another target down at 32. This is another target. So we have this target, this one. These are all targets. And then, where is it? It's 32. It's got to be under here. This one. So this and this, these are the targets. So we get, this is the one that I got out. That was that. Questions, and now I'm going to try to get into where we are. Oh, there we are. Okay. Questions? Is it Wadiad? Hi, welcome to the Bookmap Discord YouTube. The PDF, there's a link in the bottom of YouTube. You can access the Bookmap Discord TraderLab community. There's no cost. The PDFs are in there, a library of webinars, and of course, a full-time, 7-day-a-week, 24-hour-a-day community of like-minded traders. And we basically leverage our collective experience. There's just too much. So we work together. Screenshots, mutual support, all that. Discussions, maybe debates sometimes, but a cooperative environment. It's not romper room. It's really about the business of trading. Business of trading is really different than what we fantasize it is. I mean, unless you've been trading, you come into the business, you get a toolbox, and it's got 500 indicators in it. Have you ever wondered why there's 500? It's just plug and play, plug and play. And then the mystery becomes, can I find what others have not found? In other words, the right mix of indicators and time frames. And the problem, of course, is there's winning trades using even a dartboard. The thing about it is the business doesn't work that way, at least from my experience. The business is really a statistically based business. It's casino. You operate like a casino. Now, think about blackjack. The cards come out of the deck randomly, and the gamblers play the cards randomly. Casino has no control over the outcome of each individual hand, but they play the game exactly the same way. They don't change what they do if on the previous hand somebody walks out of the casino with a suitcase of cash. They just deal the next 7 cards. Because over time, with anchored inputs, because they're disciplined and they don't respond to, quote, how they might feel about it, like we do, they extract the dollars because they're executing a edge, right? Trading is the same business. The outcome is random, but it is about edge. Notice we came out to the outside, speaking of edge, outside edge. What's this? Micro high volume, break, pullback. This, unfortunately, is the target. But that would be mean reversion. That's not a trade recommendation. Let me open this up. You can see it. Whoops, get over here. This is a TraderLab structured trade if it fits, right here. That's called mean reversion. That's the mean. And we still have a target open down here, right? And these are not trade recommendations. I don't call trades. I just noticed. So, but can you see the structure? Outside edge, retail. What's too high? Let's look. Buyers going to the moon. What do I see? Sellers. This is the retail price. Buyers take a shot. We come back to the high volume here. Sellers again. I come back to the high volume here. Sellers again. This is retail. This is called outside in trading or mean reversion, rotational trade. It's a separate trade plan in TraderLab. So let's think about what's going on here. Trend, we might agree, is down. Do we want to get long? Up to you. Me, not so much. What do I want to do? Sell. What's too high? What's too low? What's retail? Fractal. Look at it. There's my volume. You'll see this over and over and over. You got to basically train your brain, really, to recognize what's going on. It takes a lot of time to get rid of all the noise and just look at what's happening right here. So this is the trigger. So this is the chop, chop, chop. Buyers absorbed here. There's your icebergs. There's the change in behavior. Here's the pullback. This is a short. That's a short. That's target. And then you have your helmet on, your risk neutral, and what's your target? Let's just see if it plays out. Not a trade. You're going there, or not. And now you manage the trade. Did you see this right here? Does this make sense? Now, if I was a little on it a little sooner, we'd be a little closer to real time. But that's pretty close. You saw the pullback, right? You guys track it. Yeah, Cocobolo, I can't get into that right now, but we can talk about it later. How we doing in YouTube? Please give a thumb up. This is TraderLab, guys. This is about the business. I mean, I don't know, remember, dopamine is the thrill we get in the fix that we get clicking the button, the excitement of the chase. That's not the business of trading. That's gambling. And I always say, go to the casino, get the cocktails and a ticket to the buffet. And if you leave enough dollars on the table for them, they'll even give you a ticket to see Adele. This is business. And business requires an understanding that we do pay the gamblers because the casinos have cost of production and overhead. There is no business that doesn't have expenses. The key to this business is accepting you have expenses and being willing to pay them to extract your edge over time. So this is your short. And remember where we're trying to go, not a recommendation. Here. Is everybody tracking? Is this something you can learn? And why? We got a lot going on in here in the Bookmap is about to give me a little slap. So this is your short. This is where the buyers came in, right? This trade would be okay right here. I would monitoring the trade I would take this. This is a trade for me. Right here, micro high volume. There was the test of that volume, which created this. This is the opposite, creates that. Can you see it? I'm going to mark this one for you. Well, anyway, it's right there. You see that high volume? Let me just throw a line on here and we'll come back and see if we get our target. That's your support. Let's watch it. And there's absorption there. This is our target, not a recommendation. So for me, short to there, and now the helmet is on. You notice the absorption, and this is in alignment with what happened here. That's where that is important. It's the same as this from the other side. Now here's the possibility. Get under here, come back here, or get under here, come out here, or none of the above. This is trading in fractals and auction market theory and having a trade plan. Now, let me tell you something. If I got, now subject to the number of contracts I trade, and I'm only in the TraderLab, I'll only talk about a 2-lot configuration. One to get risk neutral. So the worst that happens is you scratch or put a few burgers in the basket there and your broker sends you a gift basket, or your next target is here and then you're managing a runner if you're running a sequence of 3s. Let's watch. Is everybody tracking? Notice the iceberg. That's what was happening here. Let's watch the behavior together. Watch the behavior. See if you can't see something interesting. And it doesn't mean anything other than we're auctioning this right here, right now. That little high volume node, that's our little VPOC in here. This is the VPOC here for the whole day, and this is the VPOC in the fractal. So I am trading in fractals. And you see why I might anticipate this. Does this make sense? Thumb up, please, in YouTube. And use the link in the bottom of YouTube if you want to visit the TraderLab. I think TraderLab is rather unique. The traders in TraderLab, our senior trader has over 50 years. I'm going on 45 of experience, both professionally and now sitting out here in the ozone with the rest of you guys. And I've gone down so many dead ends, I can't remember. I started in 1980. And all I can tell you. And along the way, I built trading systems and a lot of stuff. I mean, so much. And I've used the tools you've used and maybe more. And I created my own hybrids. Been there. And I kept waking up in the same place. I call it Trader Groundhog Day. And I kept waking up because I had a process that was not in alignment. You know, you look at P&L, you look at percent wins and all this kind of stuff, you know, and you put this conglomerate, at least that's what systems do. And then in systems, you're doing optimizations, which is a nice term for curve fitting. When you are tweaking your indicators, moving your trend line, adjusting your moving average envelopes, pick one, doesn't matter, to make it better, you're just doing the same thing. You just don't have the computer doing it, probably. And if you do, it's just the same thing I did, and I did that back in the mid-'80s. So, don't do it. And then it was very hard for me to let go. You know, all the things, I must get something out of this. Yeah, right. Yeah, what I got out of it was resistance in my psychology to let go of things that I had believed in, even though they didn't work. They work randomly. That's the problem. You know, when we see random behavior and patterns, we think that we're on to something. That's just human nature. But we don't understand the business, really. It is edge, statistics. It's edge. If you want to know the successful business model of a trader, it is gaming, casinos. Why do the casinos do so well? Well, maybe we should use a proven business model and align with that model, not the one we think this is. Because what we think has nothing to do with what it is. And thinking is more like believing. Have you ever had an unfounded belief in something, but you held on to it and you wanted to be right about what you believe, but it turns out you weren't? It's very hard to let go of what you believe because you're going to spend your energy being right. I did. I just thought it was an adjustment. So remember, this is support and this is our target. So if I wasn't visiting with you, from there to there, TraderLab structured trade. Hope you got something out of this. This is just the way it is. This is TraderLab. How are we doing in TraderLab? You guys are taking these trades? Yeah, Rabbi, you're welcome. By the way, guys, if you're interested in TraderLab and you're curious about what this is, how it works, how you might use this tool, and maybe subject to how you're doing, change your outcome. And this is not for everybody. This actually takes a lot of time to understand because when you throw indicators away, I mean, and there's nothing wrong with indicators. If you understand how the market works, your indicator might actually be useful. But would your indicator tell you to get short here or here? What does it tell you? Or does it would you know, if you understand how the market works, that this market, if we get this in here, is going to potentially come here and then here? How does your indicator indicate that this is the target? Trade's done. Now it can go to zero. It's not my trade. This is my trade. This is TraderLab. If you're interested in TraderLab, use the link in the bottom of YouTube if you want to visit. Download the 60 PDFs of structured trades. By the way, this is not a long, but it is an exit. Where might this come back, you ask? There. Not a recommendation. Why? Trend is down. So for me, short, hasta la vista. Time to order a ribeye or take a nap. If this is too low, think about concept. Where might it come? Let's see if this is still too high. Curious, isn't it interesting? This is TraderLab. By the way, if you come to TraderLab, there's a library of webinars. I suggest you start with the primer webinar. It'll give you an overview of what this is. And you got to be willing to invest in your business. If you want to compete at a high level in this environment, I guess against some of the best minds on the planet and other retail traders, I'm going to suggest, and it's only a personal opinion, it might not be appropriate for you, that you don't do what they do, because the failure rate is enormous for the traders that are probably doing the same things you do. And I know we're all special, right? But we're probably not that special that we're going to have a different outcome using the same tools and the same beliefs. That's why I don't do what they do. And it's not because I didn't try. I would love to have a software package where I could just plug indicators and time frames in and get red light, green light, and then go down the basement and withdraw the cash. It doesn't work that way. So I don't do it. I hope you get something out of this. Let me give you I'm going to give you a quick look at these PDFs of these trades, just one, so you can see what they look like. And then you can use the link in the bottom of YouTube and join the community. And by the way, the TraderLab is not just the TraderLab community. It is also, it gives you access to all the additional education, which is available at no cost. Stocks, options, crypto, order flow with a high tier tool like Bookmap, swing trading, algorithmic behavior. We go on and on and on with this, and so much more. And if you remember, if you're a Bookmap subscriber, there's the Bookmap Academy, where you can get individual coaching, mentoring. I mean, wow. I don't know any other company that makes that investment in its subscribers. And even coming to TraderLab, you don't have to be a Bookmap subscriber, but you might be able to improve your outcome if you're not satisfied with what you're doing now. It is not about fixing something. It's about, is the process that you're trying to fix, if indeed you are, a defective process? That's the dilemma. What keeps is that it works at times. But if you had anchored inputs, you'd then be able to measure it. Measuring is not P&L. Measuring is the individual trades. This to this. Do you know what that is? Do you know what the probability is of getting here? TraderLab does. TraderLab understands, reverse engineer, reviews, screenshot, circles, arrows, draw these, do replays. You want to be able to develop unconscious competence. This is what it requires. Repetition, narration, and in my opinion, leave the indicators to the other traders. And then once you understand this, bring your indicator back. But the indicator is not leading the pack. The participant behavior is what leads, and the indicator is an output of what this is. It is not the other way around. I think it might be helpful if you learn which side, you might say, is the dominant side. What is driving the market? Your indicator or the participant? Thanks, guys. Please give a thumb up on YouTube. Hope you got something out of today. It was an interesting day, and it's not over. please give that thumb up and visit the TraderLab. I look forward to meeting you. And when you get there, ask the other participants in TraderLab, how has the TraderLab impacted their trading? What would they start with? How would they proceed in their development? What do they wish they've done differently, even in TraderLab? And introduce yourself. I'd like to meet you and say hi. Thanks for visiting today. If I didn't get to answer your questions, come to TraderLab. I do participate there when I'm not actually involved in initiating trades, and I do a lot of additional support, pre-market, during the market, and special situation reports and audio. I don't want to call them lectures, but just sharing ideas, experiences. One thing, we cannot shortcut our learning curve, but maybe you can leverage the experience of the other participants in the TraderLab, including myself and others who've kind of been there, done that. Thanks again, guys. Please give the thumb up. And remember, these streams are available exclusively to TraderLab participants for review. Look forward to seeing you tomorrow. Trade safe.